Credit cards can be a very handy tool, and in the early days of credit cards, there were some products which were an outright ripoff. Nowadays, it's got a lot more regulated and it's a lot better, but there are still many ways that you can be losing money when using your credit card. In this video, I wanted to go through examples of where credit cards have extra costs, but most importantly, how I would do things differently so that you aren't lumped with these extra costs and charges. Because by saving money through avoiding pointless credit card charges, you'll not get to the end of the year and go, where the hell has all my money gone? And more importantly, you can use that money saved to invest and get ahead financially sooner. So let's get into credit card charges. First things first is the important disclaimer. As credit cards suggest, they are a form of credit, and for this reason, they're a financial product. And this means this is not any form of financial advice. This is just a general discussion. And by going past this point in the video, you agree to be bound by the terms and conditions which have been linked in the description section of this video. When looking at unnecessary credit card costs, the first thing which became apparent is the interest rate spread in Australia. Since 2011, the interest rate has gone down around 5%. But credit card interest rates have pretty much stopped going down, and they all are circa 20%. So effectively, the spread between what they're getting their wholesale costs of funds for and what they're lending out money has certainly increased. And it's not just me saying this, there has been some research to suggest that if credit card companies did drop their interest rates at the same rate the RBA did, effectively Australians would be $63 billion better off in terms of interest costs. To fix this problem, my first recommendation would be to view credit cards similar to how we view home insurance, car insurance, and interest rates on our mortgage. Effectively, every 2 or 3 years, what we want to do is research the market, find out what other options are available, and effectively choose our provider based on better terms and pricing that is available in the market at the time. The next cost I want to talk about is unnecessarily high foreign exchange charges, and this is not so much the credit card company as it is merchants. So what is happening nowadays? Effectively, when you go overseas or buy something online, it's common to see your own currency adjusted price for that good or service. And you think nothing of it. Effectively, you click the buy button, or you tap your card, or you put in your PIN and you make that purchase. Well, there is something which is happening. That merchant is using a third-party provider for the foreign exchange, and that is costing you more money because ultimately they are getting a kickback. In fact, it is almost always better to use the MasterCard or Visa exchange rate when you are considering a third-party conversion provider. The biggest culprit for this conversion trick I've recently seen is PayPal, and the reason why I'm naming and shaming them is because of the way in which they do it. I find it a little bit tricky. Effectively, when you're on their merchant screen to make an order through PayPal, anytime you make a change to the postal address or your credit card, it defaults it back to them being the credit card or the conversion provider. Now, the thing is, in every transaction, it might be only 50 cents, $1 or $2, but when you're making multiple transactions a month on PayPal and you add it up over a year, this might be a couple $100, which you are missing out on by just simply ticking a checkbox. Also, while on this topic, and if you're planning to go overseas, it's worthwhile checking your credit card provider's fine print around the costs related to foreign exchange. If their fees are excessive, it might be worthwhile to get another credit card temporarily that doesn't charge overseas fees on your travel, or pay for a prepaid travel card. That reminds me, while we're talking about credit cards, another great thing to do is hit the subscribe button, smash the like button, because by gaining more knowledge on building wealth and saving money, you just buy everything cash money anyway. You wouldn't even need a credit card. So for that reason, you should hit the subscribe button, smash the like button, and I will love you for it. The next unnecessary cost of credit cards is cash out, and this is something which I would always avoid. A credit card cash out is when you go to an ATM, put your credit card in and your PIN, and effectively you pull out cash. It's not for a specific transaction. There are a range of reasons why I don't like this type of transaction on your credit card. Firstly, the interest-free period that you get when buying a product doesn't apply. So as soon as you draw down that cash from the ATM, effectively you'll be paying interest. Now that's normal with any other borrowings, but the difference is credit card interest is 20% or circa, whereas if you get a personal loan, nowadays it might be 6 to 8%, and if you have real estate, it might be less. The other thing is, it's quite common to have a fee for the convenience of this service. Now you might think 50 or $100 drawing that out at an ATM isn't that much interest over a month, Well, with that added fee, the effective interest on that $50 or $100 is actually quite high. The next area of cost which you need to be mindful of is overdraw charges or late payments. These are two different things. Overdraw charges are effectively when you racked up costs on your credit card and you've made a couple more transactions towards probably the end of the month, which has pushed you over your limit. So instead of saying no more transactions, what the credit card company does is allow you to make those transactions. Then they whack you with a fee and effectively they whack you with interest on top of it. In some credit cards fine print, you will also forfeit your interest-free period, meaning that on the amount which is overdrawn, you'll be paying interest from day one. Late payments are a little bit different. This is where you need to make a payment by a certain date, and if you miss it, then you are hit with an extra fee. What I would do for all my credit cards is set up a direct debit or an auto transfer that meets the minimum repayment. This way, by making the minimum payment automated, you can't be copped with a late payment fee, and then you can deal with the balance later. If you have taken on a lot of credit card debt and you're trying to pay it down, I would encourage you to look at a range of different options. The first one is if you have a home loan with a cash out facility, it is crazy that you're paying interest rates at credit card levels. The other option is a balance transfer, where effectively you move your credit card debt from one provider to another. Now, it's common for them to offer introductory rates, and there are a range of online tools where you can find those introductory rates. The trick is here, the credit companies understand that if you move your debt from one to another, it is likely you will not pay that debt off, and then you will exceed the introductory rate, and ultimately you'll be paying the high interest down the track. So if you're sorting your stuff out, be mindful of this. Find out the interest rate that you'll be paying after the introductory period expires, and just make sure that that is not significantly higher than your current interest rate. And if it is, make sure you can make the repayments and pay down the total debt before you end your introductory period. While we're on this topic of balance transfers and paying back credit card debt, it's also worth mentioning hardship. Now, I'm not mentioning in the sense that you've hit financial hardship, but if you're planning to pay down credit card debt, or you're currently paying down credit card debt and you're not planning to use a credit card, it's always worthwhile calling your credit card provider and seeing what they can do to reduce the rate. And you should make this call regardless of your own financial circumstances, because if you can save interest, this is more money in your pocket rather than interest to the bank. The next common trap is a focus on points. There has been some research completed that has found the average consumer is only getting about $12 back for every $24,000 of spending on a credit card. This article might be a little bit over the top, because by the sounds of things, it's the average consumer, and if you're targeting points, you obviously target cards with high paying point schemes. But I wanted to hammer the point home is not just focusing on credit card points. There is a couple of things worth talking about in regards to credit card points. The first thing to talk about is how credit card surcharges are becoming more common. That 1 to 2% doesn't sound like much, but it quickly stacks up, and often the actual return you're going to get from the points does not necessarily pay back the credit card surcharge. And for that reason, I genuinely try and avoid using my credit card when I'm having to pay a surcharge. I do want to play devil's advocate, and that is airlines are struggling due to COVID, and points are an easy scheme to attack. So it is more than likely that the point values may erode over time. Finally, the biggest value item which you get back from credit card points is upgrades from economy to business class. Now, for the average consumer, were you going to fly business class anyway? Probably not. And it doesn't make sense that if you are paying fees to a credit card provider to then upgrade you to a business class seat, outside of just the nicety of flying business class, is it actually saving you money? But who doesn't love to fly business class? And for that reason, you should go down there and hit the subscribe button, smash the like button, because by smashing the like button and subscribing, you're going to gain more wealth building knowledge, save more money, and with all the mullah saved, you can use that to buy your first class tickets all around the world. So go down there and subscribe now. The next thing I want to touch on is negative payment hierarchy, and if you got your credit card before 2012, this could probably still apply. Effectively, what it is when you made a payment to the credit card company, they would apply that payment to the lowest interest portion of your account. This is like negative financial advice, because if anyone ever told me what type of loan should I pay down first, the first loan would be the highest interest, followed by the next, followed by the next. But what credit card companies were doing was the exact opposite. So if you're your credit card is before 2012, I would check your fine print. The next thing I want to talk about is credit card insurance, and I am getting more and more calls on this, and it does concern me because there are a couple of different types of credit card insurance. The first one covers the product which you're buying, and the second one covers the repayments. The product that you're buying is effectively, if something's defective about it, they will insure it, or if it never comes, well, often under normal buyer protection policies of many good websites, reputable websites, you'd be more than likely covered anyway. The other type is when something happens to you and you can't repay that credit card debt, the insurance provider will step in and pay it for you. This can often be triggered by death, a disability, being injured at work, for example, or finally being made redundant or unemployed. Now, I don't like these policies for a couple of different reasons. The first one is that it costs money, and the second one is you may already have insurances like this within your super fund or through your financial planner. Also, these insurance policies commonly have exclusions, and the devil's in the detail, and often a life event such as death or disability or being made unemployed will be a case that the credit card company has to consider for hardship and restructure the debt for you anyway. Personally, for me, I always think insurance should only be for things that can wipe you out. For example, if my house was to burn down, this is something I would insure against. Well, if some of my contents was to get stolen, I'm not so concerned about that. And it's the same with credit card insurance. Effectively, will $5,000 on my credit card wipe me out? Probably not, and for that reason, personally, I wouldn't insure for it. The next thing I want to talk about is credit card surcharges, and I'm not talking about the 1 to 2% that you pay on everyday transactions, and you already know my view around chasing points and paying a credit card surcharge. Not something I want to do. But what I want to talk to you about is late night establishments, bars, pubs, things like that, where you may have had a few beers or wines or a shandy and you just tap and go. What I've noticed is some places are charging 2-3% for their credit card surcharge. Now, I haven't asked them if they're getting a kickback for that, but why would they be charging you 2 to 3% surcharge if they're gaining nothing from it? And the highest credit card surcharge I've seen, which I hope was a mistake, but probably not, is on those toy cars in shopping centers. The ride cost was $2 and the credit card surcharge was 30 cents. That doesn't sound like much, but when you do the maths, that's actually a 15% credit card surcharge. Now, I think to myself, why do they pick 15%? Does that not look on the screen like 1.5%? And 30 cents doesn't sound like much when most of your transactions are $20. So for that reason, make sure you double check the credit card surcharges on all automated machines. The next thing I want to talk about is annual credit card charges, and I got hit with one 2 months ago. A year ago now, I signed up for a credit card, got the points, and booked a flight to Europe. Guess what? A year later, I got charged $400 for that card, and I have never used it since. Well, what do? Effectively, from now on, I have put all my cost of cards and fees in my calendars so that at the time, about a week out, I can decide whether I cancel that credit card or continue using it. The final thing I want to talk about is introductory deals, and this is where the credit card provider might give you a free or reduced rate when you sign up, but it's only for a given period of time. And when you're on credit card comparison websites, it's also important not just to look at the introductory rate, but also look at the rate once the introductory period ends. Make sure when considering a new credit card that is on an introductory period, you find out what the normal interest rate is, what the annual fee is, what the balance transfer fee might be, what the late payment fee is, the over limit fee is, the cash advancement fee, and the foreign transaction fee is. And this way you'll be fully informed as to whether you continue to use that credit card after the introductory period or you close it down to get a better credit card that suits you in the future. Now you know all the different ways that credit cards cost you more money than paying with cold hard cash. And for that reason, or until my next video, best of luck and goodbye.